Welcome everybody to this panel. Glad to see people showing up. As I mentioned, for those of you coming in late, my name's Nick Jepson, along with Ayuna Baldakova. We've co-organized this panel together. We've got some great speakers. There will just be 3 presentations today. The joint paper that Ayuna and I were going to present, we're no longer going to be doing that. That project's sort of on hiatus a little bit at the moment. But it does mean that we've got more time for the other 3 presenters and also for Q&A at the end. So this panel, in case people are in doubt, is about Eurasian Development Corporation, the Belt and Road and beyond. We have this session today and then another one tomorrow. As we've sort of already discussed, you are welcome to kind of put questions in Zoom in the chat if you want to, and then we will pick them up at the end. I would say if you're going to do that and put things in the chat, if you could perhaps just indicate which speaker your question is for, because we may lose track as we move through the different presenters, and then we'll address the questions towards the end. So you can also save it to the end if you prefer to do that. Alfredo, please go ahead.
Yes. Okay. So well, let me just start my PDF. Thank you very, very much for allowing me to be here. And so this paper is about the Panda Bond financing of the Belt and Road Initiative. And specifically, we will analyze some monetary mechanisms and financial risks with this with the financing. And this is work I've done with. Well, my name is Alfredo Szklarek. I'm a researcher at CONICET, that is the National Scientific and Technical Research Council of Argentina. So I'm talking from Argentina. And I did this paper with Jiajun Xu. She's from the Institute of New Structural Economics at Peking University, and that's where we met with Ojuna, like, I don't know, now 2 years ago or something like this. So the roadmap of my presentation, it's, well, first I will tell you the research question, then we will analyze 2 different financing mechanisms of the Belt and Road Initiative. One is the direct financing by the China Development Bank, and the other one is the Panda Bond financing, where, well, I will explain more about this later on. Then we will analyze a little bit how these funds, I mean, how these funds are used, and what kind of, when executing these Belt and Road Initiative projects, and what consequences that has for foreign exchange risks and balance of payment crisis risks or currency crisis risks. And then we will analyze how the stage of repayment, I mean, of these loans to projects, and how these foreign exchange risks and balance of payment crisis risks are affected depending on what type of project is being financed. Specifically, we look at EXIPs and DUIPs. EXIPs are export enhancing investment projects, and DUIPs are domestic oriented investment projects. And then conclusions and policy discussion. So what is the research question? Well, we want to analyze the monetary mechanism of alternative Belt and Road Initiative project financing. And specifically, we'll use the money view theory by Perry Merling from Boston University. Anybody interested in financing money should look at this. He has an excellent online course, so I really recommend it. I think it's the best theory to understand money, and even the financial sector. Then we will analyze the financial risks for these Belt and Road Initiative projects and who is bearing those risks. And then how using the funds, as I said, change this exchange rate and balance of payment risks. There we will compare if these funds are used when executing the project, if you have local suppliers, Chinese suppliers, or non-Chinese foreign suppliers. And then, as I said, what type of Belt and Road Initiative project you are financing. And there we have export enhancing projects. These are projects that generate US dollars. So for example, building a port or developing export agriculture. So the host country that is receiving this financing and using the money for an investment project, that country will be able to export more and obtain US dollars or renminbi, any hard currency, or euros. They could also be domestic oriented projects, and the problem is that they don't generate hard currency. So these are, for example, solar farms or sewage system. So these are projects that are useful from a social perspective, but are problematic from a macroeconomics perspective, specifically if we look at these FX risks and balance of payment crisis risks. Let me say that being from Argentina, we are having so many crises, financial crisis, and specifically balance of payment crisis, that we are very aware of these problems. But I think that we are not unique in that sense, and even probably most of the countries where the Belt and Road Initiative is happening, or most of them, not all, but know what I'm talking about. The lack of US dollar is a main issue here. So let's go for the first alternative to finance the Belt and Road Initiative, and that is the direct financing by the China Development Bank, the CDB. Okay, so what is happening here? Well, the CDB is issuing bonds in the Chinese bond market, and with these proceeds, it is financing either the Belt and Road Initiative projects directly, or it is providing funds to indirectly through some funds. For example, the China Silk Fund, or the China Africa Development Fund, or the China Latin American Caribbean Industrial Cooperation Investment Fund. So this means that the CDB is the one that is facing most of the risks in the Belt and Road Initiative, such as equity risk, credit risk, exchange rate risk, balance of payment crisis risk, liquidity risk, and political risks. Okay, I was here talking about the risks that financing the Belt and Road Initiative is generating, and who is bearing those risks. So let me analyze each one of those. For example, you have equity risk. And when do you have equity risk? Well, when the CDB or these Belt and Road Initiative funds do equity investments in Belt and Road Initiative projects, and these projects may make losses or not distribute dividends. So that is equity risk. So of course you need good projects, but still those risks always exist, even if it's a good project. Something can go wrong. You have a credit risk when the CDB or the funds, the BRI funds, lend to BRI projects, and these projects might not be able to pay back those loans later on. Then you also have exchange rate risk, and that is when the Belt and Road Initiative projects, they produce proceeds in local currency, but has to pay back the loan in renminbi or in US dollars. Okay, so, and that is a major risk, you know, especially when you are financing a project that is domestic oriented, but are not export enhancing. This is a major, I think this is a major problem. I mean, this is, okay, I didn't say this, but this is like more like a theoretical paper or a theoretical analysis. But I imagine still that like the idea with the Belt and Road Initiative is to foster exports. So, but still there might be some projects that are more domestic oriented. Then we have the balance of payment crisis risks. Sorry, this exchange rate risk, what it means is that if you owe $100, but your project is generating proceeds in local currency, then the exchange rate at the time when you have to pay back or exchange those local currency for US dollars to pay back, that exchange rate may change, and it might change 10%, 20%, 50%. So the proceeds, even if the project is profitable, maybe the proceeds in local currency are not enough to pay back the loan. And balance of payment crisis risk is similar to exchange rate risk, but I want to separate them because it's when you have a very severe crisis in a country where you are not allowed to buy, if you have local currency, you are not allowed to buy US dollars or renminbi in the host country. Okay, so these are it is related to exchange rate risk, but it's different. Then we have also liquidity risk, and that risk is faced by the China Development Bank because the China Development Bank is issuing bonds in the Chinese bond market, and then it's using these funds to lend to this Belt and Road Initiative project. So the timing for the CDB to pay back its bonds might not be the same timing for when it's going to receive the proceeds from this Belt and Road Initiative project. So there you have a liquidity problem. Yes, it might be that if the bonds that the CDB are issuing are shorter term than the loan given to a Belt and Road Initiative projects, then there is this time mismatch, and that is causing liquidity risks for the CDB, because it's not that it's insolvent, but it might be just that it doesn't have enough liquidity to pay back its bonds because it has to wait more time for receiving the proceeds from the Belt and Road Initiative project. Then we have political risks. And when in the host country that is receiving the financing, it might happen that the government changes and that the new government has completely different ideas from the previous one, and might have a different policy stance about the Belt and Road Initiative or even about China. So there you have a political. For example, an example of this is, for example, what happened in Malaysia. I don't remember now if it was 1 year ago or 1.5 years ago that the government changed, and they were not that eager to, or they wanted to renegotiate. I don't know the details, but what I know is that there was like some problems there, and some of the projects were paused and had to be renegotiated because this new government had different ideas than the previous. So of course that is a risk. So the problem here is that when the CDB is financing the Belt and Road Initiative project directly, either through these funds that are just intermediaries, or directly, that the CDB is lending directly to this project, the CDB is the one that is facing all these projects, all these risks. Yeah, probably there are more risks than this, but these I think are the most important. So so what happens is that the CDB might not want to face all these risks by their own, and might want to diversify away the risk or share the risk with other financial actors, and especially with domestic actors in these host countries. Yes, but the problem, for example, get on board, like making an agreement with a commercial bank in this host country, or a national development bank in this host country, and co-financing these Belt and Road Initiative projects. But the problem is that usually in these countries there is a lack of financing. So these banks, or even the government in the host country, would not have enough financing for financing this project. So what is the solution to this? Well, the solution are the Panda Bonds. And what are the Panda Bonds? Well, it's when Panda Bonds are bonds issued by foreign institutions like enterprises, countries, funds, or banks, issued in renminbi denominated bonds in the Chinese bond market. So, for example, a bank from Argentina goes and issues bond in the Chinese bond market. So those are Panda Bonds. So then this Argentinian bank, it will have renminbi and will be able to co-finance the Belt and Road Initiative project in Argentina. And these Panda Bonds were initiated in 2005, but not much happened until 2015. And lately, the truth is that they have also been paused a little bit. And as of March 2020, the total issuance of Panda Bonds are around 600 billion renminbi, that is around $100 billion. And what is the role of the CDB in this Panda Bond issuing? Well, the role, it has an active role, and it's being an underwriter and a dealer in these Panda Bonds. So what is an underwriter of bonds? Well, it's a service that CDB gives this foreign entity, this bank, for example, Argentinian bank, for example, to help issuing these Panda Bonds in the Chinese bond market. It might imply that there is this agreement between the CDB and this Argentinian bank that the CDB will buy all the bonds. These are different ways that underwriters work. The agreement could be that the CDB will buy all the bonds and then will start selling it in the Chinese bond market, or that they do this issuing of bonds, and if not all of the bonds are bought by the market participants in the Chinese bond market, then the CDB will buy the rest of the bonds. What is acting as a dealer of bonds? It's not the same thing as being an underwriter. The underwriter is the first procedure. being a dealer in bonds is for example, when the CDB is buying and selling bond market, Panda bonds in the secondary bond market. So it's creating markets for these Panda bonds. Okay? So by the CDB, by helping these foreign entities to issue Panda bonds in the Chinese bond market and using those proceeds to co-finance Belt and Road Initiative projects, the CDB is passing some of these risks that we discussed to these foreign institutions and to the Chinese players that invest in these Panda bonds. Okay, so that's why the CDB is interested in issuing, in helping these foreign entities to issue bonds. For example, just one example, it's not the same thing if the CDB is financing everything than if a bank, a local bank in a host country is co-financing. Why? Well, because this host bank probably will have a lot of connections in this host country. So if there are some problems, for example, this political risk that I said, well, it's not the same for the CDB being there alone and having to manage this than having an ally in the host country. Okay. Also, if this project is going bust, then the holders of these Panda bonds might suffer the losses instead of being the CDB. However, still there is, I mean, because this Belt and Road Initiative is not completely a market, a complete market investment program, let's call it like that, still the Chinese government is interested in this Belt and Road Initiative. So that might mean that the CDB might have to act as a dealer of last resort if there is a run against Panda bonds in the Chinese bond market. So let's say that there is for example, now that there are some risks that many countries in Africa or even in Asia or in Latin America that will not be able to pay back the loans to China. If they are not able to pay back the Panda bonds, then it might be that the CDB still may have to step in and buy those bonds to avoid a run on these bonds and avoid destroying this Panda bond market that is emerging in China. So even if these Panda bonds is a way of reducing the risk for the CDB, the CDB is still very engaged. And now let's talk about how the usage of the funds when executing Belt and Road Initiative projects, how that affects and balance of payment crisis risk. So the idea is that to execute the real investment project, you need to contract suppliers like labor force, materials, and machines. So these suppliers, they might be Chinese suppliers. So what does that mean for the host country and for China? Well, for the host country, it means that there is no inflow of US dollars or renminbi to its financial market. So it cannot increase foreign reserves at the central bank. So that means higher FX and balance of payment crisis risks, because it's different if they would receive these dollars, we will see like when it's a local supplier. And what does that imply for China? Well, there is no USD outflows because all payments are made within the Chinese banking system. Okay. What happens if the suppliers are non-Chinese foreign suppliers, not not suppliers in the host country, but from Europe or the USA or from any other country. Well, it means for the host country, again, no inflow of US dollar or renminbi, cannot increase foreign reserves, so higher FX and balance of payment crisis risk. Instead, I mean, it's the idea is that it's like you are getting a loan, but these US dollar renminbi are not entering into your financial markets, staying in China, and all the payments are made in China. In this case, when it's non-Chinese foreign suppliers, it means that for China, there will be USD outflows because all payments are made outside the Chinese banking system, for example, to banks in Europe or in the USA. So this means that the Central Bank of China may lose foreign reserves, or there might be a depreciation pressures for the renminbi. Actually, this is a little bit what happened a couple of years ago. There was a sharp, I'm not saying that it was completely due to the Belt and Road Initiative, but there was a sharp fall in foreign reserves in China. They fell 25%, and I know that they were really, I mean, really concerned about this. And I think that this reduction in foreign reserves can explain many of the things that we see happening now. For example, China being a little bit more careful with where it invests, how it invests. And the third case could be when there are local suppliers. In that case, the host country will receive this renminbi, so there will be this inflow of US dollars, and that means that it can, the central bank can increase its foreign reserves. So that means that the FX and BOP crisis risks are low. Okay, because now this host country is receiving the dollars, but all the payments are made in local currency. So these dollars stay in the banking system of the host country, or in the and the central bank might buy those dollars. Okay. For China, it depends. There might be, that depends. There might be no USD outflow if the host country bank keeps the renminbi that it receives deposited in the Chinese banking system, or there might be USD outflow if the host country decides to transfer those renminbi and exchange them into US dollar and transfer them to the US or the European bank system. So in that case, the PBOC would lose foreign reserves, and there would be a risk of a depreciation in the renminbi. In the paper, I make I explain better these two alternatives and why they happen. Now I don't have time, but it's important if to use the money view to understand why it might depend what the host country bank does. Finally, let's talk about very fast the repayment of the loans when it's time to repay the loans. So the loans to the Belt and Road Initiative projects are in US dollars or in renminbi. So if the investment project is export enhancing, it will generate US dollars. If it's domestic oriented, it won't generate US dollars. So there is a currency mismatch between the loan in US dollar or renminbi and domestic oriented projects. Not so for export oriented projects. So if it's a domestic oriented project, they need to access the FX domestic market to pay back the loans. And there you have the exchange rate and balance payment crisis risk. Instead, if it's an export enhancing project, the project is generating US dollars, so it will just pay back the loan. So, conclusions. The CDB may reduce its financial risk by promoting Panda Bond financing of Belt and Road Initiative projects. the usage of the funds is important. It might reduce or increase the FX and BOP crisis risk in the host country. That depends if it's using local Chinese or non-Chinese foreign suppliers. And also, and this usage, as we saw, is also affecting the Chinese foreign exchange market. Finally, the CDB, the host bank, and the other involved actors have to consider FX and BOP constraints when choosing what type of investment projects to finance. And of course, it's better to finance export enhancing projects than domestic oriented projects. Finally, let me say that this distinction between export enhancing projects and domestic investment projects, it's not discussed very much in mainstream economics or by European scholars or US scholars, because they live in countries that have hard currency. So they don't see these problems. But if you're living in a developing country, you know perfectly that this dollar thing is quite important, and probably one of the most important determinants if your country can grow or not. And there we have a great economist called Previch, Argentinian economist called Previch, that has died. No, it's the most famous Argentinian economist, Previch.
Okay.
He was talking about these issues.
Alfredo, sorry to cut you off. Thank you.
Thank you very much.
Sorry, we're going to have to stick to time if we're going to fit everybody in, but thank you very much for that. Lorena, are you ready to?
Yeah, I'm back. I hope.
Great.
Can you hear me?
Yes, a lot better now.
I'm really sorry. I'm based in London, but today, I mean, we had an upgrade before and I had the same issue. So I'm trying to share my screen without putting the video on, if it's okay with you.
Absolutely,
we'll
yeah.
Try to minimize the flow. So thank you for Alfredo for stepping in. I kind of put in the chat a question that you, touched upon before at the end of your presentation. Maybe we can discuss it later. And I think, it's a very interesting paper, and it fits, although it goes from a completely different perspective, because it was a more theoretical and kind of global macro one. Mine, in a way, fits with as a case studies and looks at the agency kind of issue that we are facing within the debate of BRI, because most of these questions can be answered by also looking at the beneficiaries and the political economy specificity of the country context in which the BRI is operating. And this paper is basically an exercise that it's a work in progress, so comments are welcome, questions are welcome, but it's basically try to historicize the process that led Uzbekistan to include the BRI in its pattern of structural transformation. So I'm going to look theoretically at the debate of patterns of market transitions, which are relevant for the post-Soviet space, but actually for many low-income and middle-income countries, and kind of merging and stretching a little bit within the vis-a-vis the current revived debate of state-led accumulation, or if you want, state capitalism. And I'm gonna try to apply the different kind of phases of state-led accumulation in the context of Uzbekistan, which I basically divided in two phases. One, it comes from starts with independence in 1991 and arrives until the 2016, when it's basically there's been a switch in the presidential office with the new president Mirziyoyev. And now to understand how these are more like, if you want, some people define it as a neoliberal turn, has been reconfigured capital accumulation processes vis-a-vis new flows, especially in the context of Chinese foreign investment and trade relations. So briefly, I wanted to kind of recap for those who are not familiar with the debate of market transition, but I'm sure many of you are, so I'm gonna be very quick about it, that there has been a narrative, the narrative of market transition, and has been kind of theorized in a sort of dichotomic way. So we've been observing two different directions in the way countries have started to privatize and marketize their economy. And one is called the shock therapy and Big Bang one, which was based basically on Washington consensus prescriptions, based on fiscal discipline, very rapid privatization, removal of barriers of the FDI, deregulation, but also property rights and financial liberalization. Whereas the case, and this was, for instance, the case of Russia and many other countries in Eastern Europe, whereas there's been a more gradual patterns towards market transition, which is the one that has been widely studied in the context of China, but I argue that the Uzbekistan scandal follow a Chinese road to transition. The point that has been raised from a more skeptical understanding of the shock therapy is that marketization has not been a sufficient condition to a successful transition to market economy, and there has been many kind of variables that have been overlooked to understand why this has been not been the case. And the first one is being the role of the state in terms of multidirectionalism and multi-scalar political and economic policies that has been attached to processes of accumulation, for instance, in process of mechanism of sectorial transfers, for instance, from agriculture to industrialization. The second one is the specificity of, for instance, the Chinese Development Bank this is adopting is a sort of flexibility in the timing of their loans and financial capacity, which has been able to invest on projects that has been for decades under investment because of the very strict and rigorous, if you want, not rigorous, but yeah, strict financial rules of market rules. And also the pace, so understanding what has been the targeted and strategic sectors that have been purposively kind of slowed down in the process of marketization. This debates is actually, and there is a paper that I'm trying to write about it, because there is a kind of this kind of debate on market transition but can be very useful to the current revived debate on state capitalism that I see, for instance, Alami and Dixon writing numerous papers on it recently. And I'm basically adding exactly an empirical specificity to this periodization of state capitalism, but also I think it's important to look at the role of structural transformation, because structural transformation can help us to identify source of surplus and distributional outcomes of these patterns of accumulation. And this can be actually a very interesting response variables to understand what are the developmental outcomes of all these new waves of investments. So very briefly, because I'm concerned with the time of our session, there's been, I'm basically gonna grasp briefly the first wave of state-led accumulation of the Uzbekistan case. And I'm gonna say that Uzbekistan has accumulated foreign exchange in two main ways. First, through an uneven exchange within agriculture, through price scissors in the wheat and cotton sector, and also through a complementary macroeconomic reforms, and has been, for instance, a gradual and selective privatization that have started similarly to China, with privatizing services and small and medium enterprises, by keeping private ownership of upstream sectors, for instance, natural resources, energy, and infrastructure. Maintaining what has been recently called trade sovereignty, so facilitating more of bilateral political geographical bilateralism rather than multilateralism based through WTO rules. And also by implementing what we all know called as import substitution industrialization through the transfer of this surplus accumulated through agriculture towards industry and manufacturing, for instance, in the automotive sector and chemicals. There has been still, in comparison to low and middle income countries, and high spending as percentage of GDP in health and education. So education, for instance, indicators point out to alphabetization on 99%, and slow price liberalization. So there's been an application of prices as macroeconomic tools to distribute surplus across classes, so society, but also sectors. This has resulted in a current account surplus and also complemented by currency restriction, though the capital account sector was completely, was not liberalized. I'm just gonna quickly look at the structural composition of the Uzbek economy, and as I said, through state monopsony and monopoly. Oh my God, there will BIOS. He wants to update my. I hope it will not be before my presentation starts. So I'm gonna quickly go to the cotton sack. I don't know what is going on with the Open University today. And then, sorry, but it doesn't allow me to go. This is not nice. It doesn't allow me to go ahead with the slides.
Do you want to, could you maybe send your slides in a file in the chat, and then I could share them and just run through them as you tell me when to change?
Yeah, no, the problem is that I can't I can't action anything on my laptop now.
Oh.
But I can continue talk, and because I know this presentation.
Okay.
Yeah, so I will basically now look at this being a process of, I will basically look at now the new processes of liberalization that happened with the new president Mirziyoyev. So the issue that has been a privatization and liberalization of the strategic sectors in agriculture, although other strategic sectors such as infrastructure and energy have been kept public. At the same time, there has been a liberalization of the capital account, which has facilitated the intensification of trade and investment relationship with China. What has happened? China in the last few years has become the first trading partners of Uzbekistan, and has also financed major infrastructural investments. And this is connected to the previous presentation, as financed is in the UN currencies. So there has been a specificity in the industrial, financial, and trade relationship, which is connected to the fact that both of these countries have interest in intensifying their relationship. First of all, because Uzbekistan has a need for intermediated goods. So at the same time, China's need primary resources from Uzbekistan, in particular gas. What has been the risk, as the previous presenter has actually outlined, there has been a shift in the balance of payment, in the sense that there has been one of the biggest debt, the debt has increased, deficit as well, and major loans have been issued by China. So although to conclude this oral presentation at the moment, one of the issues that has been the open questions of the BRI projects beyond Uzbekistan is that the long-term outcome and developmental outcome will not be able to be assessed in the short term. At the same time, we need to consider that most of these countries have a very low availability of domestic capital, and this has created the condition for the BRI to intervene in the vast majority of the Central Asian countries, for instance. There is also attentions with regard to the mission that the investments would want to, the mission that the investors wants to apply to the specific countries. Because, for instance, in Uzbekistan, there is an endogeneity of manufacturing that is actually very huge potential for Chinese manufacturing as well. So the open question is that what are the multidimensional risks, but we hope to be able to assess it in the near future. And I'm happy to answer questions later on, because I think the computer will restart now. Thank you very much.
Okay, thank you very much for that under challenging circumstances. Appreciate you keeping going, and yeah, hopefully we'll pick it up in the Q&A. So okay, let's move on then to our final two speakers, Indrajit Roy and Ran Hu. Yeah, please go ahead. So we've said 20 minutes, 25 sort of at the outside to leave a bit of time for Q&A if that's possible, please.
Of course. Thank you so much, Nick and Oyona. I hope I pronounced that right. My colleague Ran and I are delighted to be here to present this very preliminary work. Development has often been assumed to refer to an ensemble of ideas and practices that originate in the West and are then diffused across the world through European colonialism or multilateral development institutions based in Western Europe and North America. And we've titled our paper Reversing the Gaze because in a way, what we're sort of looking at is a slightly different way of thinking about development. And we have been led to this by ongoing developments in the international sort of order. Most of the prevailing positions in our discipline adopt a Eurocentric view and regard development as a consequence of interventions by the global North on the global South. To be sure, there have been important differences. Modernization theorists and some Marxists celebrate Eurocentric narratives of development as improving the condition of the world, by and large, on balance. While dependency theorists, post-colonial and post-developmental theorists are critical of such accounts. The first group of scholars undermines the relations of power, domination, and subjugation that have shaped the contemporary patterns of development and underdevelopment, whereas the second group of scholars calls attention to the ways in which such relations of power are reproduced and manifested in global patterns of poverty and inequality. Now, what these narratives collectively tend to ignore is the agency of societies and states in the global South in shaping a politics of global development. Accepting assumptions of the Eurocentric provenance of development, such narratives neglect the ways in which governments and communities in different parts of the global South connect with each other to shape a global politics of development. Now, Chinese investments in Europe promise to rupture such Eurocentric assumptions. That such investments could originate in the global South and that they are directed not towards other regions of the global South, but towards the global North is relatively novel within the development studies discipline. I'm not saying it doesn't exist, of course it does. Lots of our colleagues working on this theme now, but it's relatively novel for understandable reasons. This is, of course, a trend that has thrown our colleagues in the disciplines of international relations, international studies, and global affairs into a tizzy as they examine China's inroads into Europe. The Economist magazine in 2011 even referred to a new scramble for Europe to refer to China's growing investments. Now, a major debate sparked by Chinese investments in Europe relate to its implications on the global order, more specifically the liberal international order, which is allegedly underpinned by openness in trade and exchange, loosely based rules-based set of relations, security cooperation, and the inevitability of liberal democracy. Europe, after all, is considered, with some justification, the birthplace and heartland of the liberal international order. Now, as a result of Chinese investments on the continent, quite polarized views have emerged. On the one end of these views is the perspective that a conflict between China and the liberal order and the West more broadly is inevitable. A conflict is brewing, we are warned. On the other side of these views is the perspective that China's emergence signals a co-optation within the liberal order. We have nothing to fear, we're told, since China appreciates that the liberal order is beneficial to all, including to her, that is China. So some of us got together back in the summer of 2019 to think about these questions. And we are now assembling an edited volume in which we reflect on the implications of Chinese investments in Europe on the liberal international order. And now I'd request my colleague Ran Hu to synthesize some of the key findings for you in the next few minutes. So over to you, Ran.
Thank you, Indrajit. So I'm going to start with the current project. So this is the project is ongoing. So what we presented is still kind of initial conclusions. So as what Indrajit mentioned earlier, we are kind of investigates the effects of Chinese power in relations to the international liberal order. That is how much or what kind of power China can actually exercise over other states, and by extension, the liberal order, how effective that is. So we ask our contributors to think through these two very broad kind of perspectives. The very first one is the perspective of state-society relations. So we were kind of thinking that this particular perspective could help us to further disaggregates the role of different actors within the states. In our case, China and some of the European countries our contributors are examining at the moment. The other one is it helps us to actually explore further about the sources of Chinese power. So the sources will not simply reside in a state, the government itself, but also kind of permeated through the whole society, manifested through different actors. The other one is we are kind of building on our kind of a contribution on Evelyn Gould's theoretical framework called modes of influence. So this kind of her kind of framework help us to categorize, to pinpoint what not like pinpoint, but to basically to understand Chinese power a little bit more in a more nuanced way. So she kind of distinguished power from influence. She argued that power is more of like a resources, a latent kind of capability. It's there. However, influence is the actual exercise of power or the act of modifying other actors' preferences. So she categorized the Chinese influence. Her case is built on China's interaction with Southeast Asian countries. So she has three categories of China's influence. The very first one is a preference multiplier. So this preference multiplier refers to when China's interests are in line with those of other countries, China usually tend to make full use of the structural power or its economic power to make sure that other countries' preferences or behavior are in line with China's interests. The second one is more of persuasion. The persuasion aims to kind of persuade other countries to tell a better story. So this happens when other countries are not very sure or still undecided as to China is China a threat or is China peaceful. The last one is ability to prevail. So actually, even for Evelyn Gould's research, this is still very rare. In the case of this is when the interests of China and other countries are in a different spectrum. So they are kind of contradictory to each other, and China tries to impose its kind of interests upon others and try to alter other actors' preferences or behavior. So these two things, so that's we ask our contributors to think about kind of like, these two. When they do their research, they keep those two perspectives in their mind. So we ask them to look at, the interface between actors and in states and societies that shape overseas investment in China. The second area is the relationship between the Chinese state and business and their counterparts in selective European countries. The third one is the interactions between the Chinese state and regional groupings in Europe. And the last one is the impact of the Chinese investments in third countries on its relations with European states. So within this kind of four kind of things, we have cases cover Greece, Hungary, Italy, to the Western Balkan countries. So as I said, this is a project ongoing, and we kind of draw from different contributors. This is our kind of initial kind of conclusion. So our contributors argue that in Hungary and Western Balkans, China's influence is more reflected through preference multiplier. In Italy and Visegrad group, so that's Hungary, Czech, and other two countries, China's influence is quite is reflected through persuasion. So there is no strong evidence, however, to suggest China has the ability to actually prevail with regards to European countries under the examination. So we kind of draw on this, our contributors' conclusion and argument. We argue, we find that actually the implications of the surge in Chinese investment in Europe on the international liberal order are rather fragmented. Neither does this phenomenon destroy the liberal internationalism, or does it actually signal China can be fully integrated into this liberal order. So this is our current kind of initial conclusion, and we are kind of trying to make sure those two perspectives are more integrated into our introduction, and also ask our contributors to think about it when they write their revise their chapters. So that's everything I want to kind of share with all of you. If you have any questions, you can about our project, about the chapter we are writing at the moment, please feel free to ask me or interject. Thank you very much.
All right, thank you very much. So 3 excellent papers overall, and we have plenty of time for questions and answers then. So I mean, we're quite a small group, so I guess if we just collect a couple, and then you can all go ahead and answer them if that's okay. So Lorena, you had your hand up.
Yeah, I'm back again. Sorry again.
No, please, good to see you back.
Yeah, no, this is the beauty of online conferencing.
Sure.
I'm so sick of it. So, thank you. I mean, it was really interesting, both presentations, and I'm sorry, yeah, for not, being, able to enjoy the full fledged of it. I have a question for both. I mean, Alfredo, I really enjoyed your presentation because what is at the moment going on in the literature is that because we don't have any empirical data, we are theorizing on risks about BRI in any kind of multidimensional ways. So there is like a political economy way, geopolitical way, IR is theorizing on risk. So I really liked your take on unpacking the financial one. And I put it on the chat box. I don't know if you discussed it or I mean, I think it is an opportunity for me to also brainstorm on it, because it is really hard for me, at least in my case studies, to create the taxonomy of what is domestic and what is export oriented or export enabling. For instance, when you look at the role of infrastructure, how do you, could you give me an example of what would you define as a domestic oriented project? And then I have another question, if Nick, it's fine to ask me about for the other presenters. Thank you very much. At the Open University, we are also doing something very similar. I don't know if you're aware of it. I mean, there is a project called Redefine run by Giles Mohan, and I'm a research fellow in it. And we are looking at Hungary, Greece, Germany, and Britain. And we're also trying to create this sort of, this dialectic, what I was saying, that is also now the new debate about BRI, is like to understand what is the positionality of the recipients, no? And I'm really interested in your concept of persuasion. And I know that is like, I know that it's like, it would be interesting to know more about it, because in my experience, I'm an Italian based in the UK, and I think it didn't come up in my presentation well enough, but I mean, in the case of Uzbekistan, for instance, the role of international financial institutions have played a huge role in pushing, the country to comply with a globalized neoliberal, if you want, sorry if you allow me the third, financial structure that can host, the Chinese kind of investment or any other kind of investment. So I was thinking, is this a persuasion monolithic, or is it something that this applies to different realities that you have been looking at? Thanks.
Well, I guess that's enough to take those if you're able to do that. So maybe Alfredo, do you want to go first? Yeah.
Yes. So thanks. Well, I mean, I will give you just one example. If you finance, for example, I will take a controversial example. So we all agree that the climate change is a major problem. So no discussion about that. But now let's think about it in the terms of domestic-oriented investment project or export-oriented investment project. So for example, here in Argentina, we financed a huge solar panel farm. All the solar panels were with a loan from in US dollar from abroad. All these solar panels were made in China, so no local production. And when these solar panels start producing electricity, this electricity is not for export, it's for the domestic market. So it's not generating US dollars. Of course, you could say that, well, but you need electricity for another sector that are doing exports. But so it's not that easy to classify, of course, in reality. But clearly that is a problem, because you have to pay back in dollars, but you're investing so all these climate change investments, I see that problem. I mean, we all want them because it is important, But if they don't generate US dollars, then how will these countries be able, there need to be another sector that creates this dollar. Another example, a sewage system. I mean, of course, it's a great and it has social benefits to have a sewage system. But if that is, but of course, the sewage system is not creating US dollars. So if you finance it with US dollars, then you need another sector that that generates those US dollars to be able to pay back. So basically, that I think that is our clear examples. I mean, if you build a port, it depends if that port will help this African country, for example, to export goods or to China. That port is an export enhancing investment project. But if that port is going to be used to import products from China, and there are no goods that can be exported from this African country to China, then it's this port is more like a domestic-oriented investment project. So it's difficult to make this taxonomy in reality, but I think it's quite clear when it's generating US dollars directly or when it's not generating US dollars directly. I don't know if that is giving you more. Yes, great.
Okay, thanks for that. Indrajit and Ran, do you want to go ahead?
Yes, if it's okay, I can begin to respond, and Ran, if you want, you can sort of come in if you have anything to add. Thank you for that question. It's a really important question, Lorena, and I'm very glad to hear about Giles's project. Of course, it's a source of inspiration for a lot of what we've been looking at. So I think persuasion, of course, is, most simply put, it's a way of convincing. It's a way of sort of pushing, your belief or your way of doing things. And it's always tricky, isn't it? At what point is it persuasion, and when does persuasion become coercion? But of course, in this particular context, I mean, there is no question, at least given the European context and given the EU sort of at the backdrop, and given that China doesn't share any boundaries with any of the European countries, the coercive element that it may exercise among, say, its East Asian or Southeast Asian elements is pretty much sort of ruled out. So we're thinking about persuasion really in terms of the propagation of your belief and convincing the other side that what you have to say is, or what you have to offer is in some ways to the benefit of the other party. Now, let's be clear, it may well be to the benefit of the other party. It's not about false consciousness. It's not about trying to sort of hoodwink the other side. But it's about convincing the other side that what you have to offer is helpful. And I think in this respect, the engagements with Italy as well as with the Visegrad group, as Ran said, did suggest elements of persuasion, where China offers itself as a sort of second wheel. The first wheel is the United States and the champion of security, and China then presents itself as a champion of economic growth. Now, of course, in the Italian context, as you might know, that has fallen through. That persuasion has failed because Italy pulled out of the BRI, isn't it, a few weeks ago? But there was that attempt. There was that attempt, and for a while it seemed to have worked. Certainly at the time when our collaborators were writing, and it's actually Filippo, whom I'm sure who's been sort of working with us. So it does suggest a sort of persuasion. In the Visegrad context, of course, it's a little more more clear-cut in the sense that the persuasive element. China expecting or requesting them to, allow Chinese companies to build 5G in return, and, to refrain from criticizing on human rights and, situation in Hong Kong, to apply free market principles to Chinese goods and suppliers, and then offering itself as a source of economic growth to its Visegrad partners. So I mean, I think it's that element of the persuasion that our co-author sort of persuaded us to think about. Yeah. I don't know, Rand, did you want to add anything or?
No, I think you covered everything. So thank you very much.
But thanks. That's a great question. Thank you.
Okay, great. So we've got one in the chat, which I'll read out from Laura Mann for Alfredo. Says, I've been reading Jonathan Parry's work on index firms in Chinese investment and how the Chinese state might be trying to direct these firms along strategic ends. I wonder if Alfredo can talk a little bit about how Panda Bonds fit in within the wider context. How is the state using different sorts of funding or actors to do different kinds of activities? So that's one question. And if anybody else, does anybody want to add another one, and we'll take a round here?
Can I ask a question as well?
Go ahead. Yeah.
Yeah, I have a question, two questions actually. One to Lorena about your Uzbekistan case. I was wondering, after Mirziyoyev came to power in 2016, and you were talking about the Chinese investments, are those more investments towards infrastructure, so like domestic oriented in like what Alfredo was talking about, or more export oriented ones? Maybe you can just expand a little bit on this issue. And a question to Indrajit about the international liberal order. I was wondering if you can define it, because it can mean many things, right? It can mean neoliberalism, it can mean human rights and other things. So maybe just for clarification. Yeah, thank you.
Okay, I think that's enough to begin on with. So or I guess we'll just go in order. So Alfredo, can I ask you again to?
Yes.
Go ahead.
So if I'm not sure I'm completely understanding the question, but as I understand it, I think that when the Chinese Development Bank is doing the direct financing, it is also or even these funds like the Silk Fund, etc. I think they of course, this we don't know because all these are secret things, but I mean, it's for sure they have much more influence in for example in saying, okay, we will lend you money, but you have to do this project with a Chinese company. Instead, when it's Panda Bonds, it's like they are losing a little bit of the control. Yeah? And even we did some interviews in China, and that was one of the things that some people we talked to that worked at the Chinese Development Bank, they were saying that the problem with the Panda Bonds was that they were losing a little bit the control of how to use that money, because I mean they cannot, I mean it's impossible for them to, if they are helping a bank from Morocco, for example, or Malaysia, to issue these bonds, then they cannot really control completely how these banks are going to use those funds, or they lose a little bit the control. So they don't like that. So, and I will ask Indra a question. So what I've been seeing lately is that Europe and even the USA, they are now starting to talk about development banks, state-owned development banks. This was unthinkable like before. Last year, there was this Financing Commons Summit, like bringing together a lot of development banks from all the world. France has been very active in that sense. Now it's Italy's turn. So I was wondering how, so it seems that, for me, it seems that this is like a response from these countries, that they see that, look, if we don't start like building these things because, for example, in Argentina, when China says, okay, they want to build a nuclear plant, so China comes with all the financing, everything. So it's very difficult for Argentinian politicians to say no to that, you know. So that gives them a huge influence. So I was wondering how you
Absolutely. It's a fascinating question, and it actually links to the question that was asked earlier about how we might define the liberal international order. So Nick, if you're okay, can I respond to those two questions together, or did you want to take any more questions?
You'd think I would have learned to unmute myself after a year and a half of Zoom, but there you go. Yes, please go ahead if that's okay, Lorena, and then if you can answer after. Yeah.
Okay. So I think, yeah, thank you for asking about how we go about defining the liberal international order. So we follow this scholar who's the liberal scholar, John Eikenberry. And Eikenberry has a 2018 paper where he writes about the end of, or the paper is titled The End of the Liberal International Order. And he's identified 5 convictions that more or less make up the liberal international order, and that's what we followed. So his 5 convictions, and if you don't mind, I'm just going to sort of, you know, pick up those 5 points from the paper. You know, the first concerns openness and, you know, the open trade and exchange. And the assumption there is that an open international order facilitates economic growth. So these are questionable assumptions, but these are liberal assumptions, and that's what we proceed on. The second conviction around the liberal international order is what you might call a loosely rules-based set of relations. Again, we know that rules are often flouted, but the idea is that rules and institutions facilitate cooperation. And that's sort of key to, you know, how the liberals would perceive of the liberal international order. And this, I suppose, relates to the idea of multilateralism, isn't it? You know, that you have rules-based sort of governance that, you know, benefits everyone. The third is a view that there is some sort of security cooperation that comes together to support and to safeguard the liberal international order. So think of the NATO, for instance, as the classic example of a security umbrella for liberal international order, and which presumably guards freedom all over the world. And we know where that goes, but then that's the assumption again. The fourth sort of conviction that underpins the liberal international order has to do with the idea that you know, international society is reformable, is corrigible, in that sense that, you know, power politics can be tamed and states can build relations around mutual gains. Again, we know this is all, you know, fluff, but that's the self sort of understanding of the liberal international order. And the fifth is the expectation that all states will move towards liberal democracy sooner or later. Now we know where that's going, but again, this is a conviction of the liberal international order. And I think it's highly debatable, it's highly provocative, but I think it's a very clear set of convictions which helps us to pin down what the liberal international order might mean and how various scholars writing in the liberal tradition would be talking about when they talk about the liberal international order. So there are certain key things as trade and openness and liberal democracy, which we can easily identify. And at least even if they've not been supportive of liberal democracies abroad, they have, you know, most of the sort of countries, most of the countries of the global north and in the West have certainly supported liberal democracy at home. And I think that's the sort of way we've gone about. That's the definition of liberalism, a liberal international order that we've followed. And that, of course, links directly to the question of state development banks. The very idea of a state development bank would seem anathema to the liberal international order, simply because, you know, you have all this talk about openness and trade and exchange. And the idea is that this is not something a state development bank can do. we can always debate that, whether or not state development banks can or cannot promote openness. But the idea is that the moment you have the state development bank, there is an interference in the market. Now, to be sure and to be clear, I don't think the Chinese have ever persuaded or tried to tell anybody that you should set up state development banks. But countries have started establishing or talking about state development banks, as you, Alfredo, said, in reaction to or in response to what the Chinese are doing. So I suppose one can think of a fourth way to think about Chinese power, which is nowhere near direct power or exercise or use of power, but a reaction to what is going on, or a response to be seen as even more attractive than the Chinese are. So, I mean, I don't have a very sort of clear response to Alfredo's observation, except to say that, yes, it is a way of thinking about agency and power, but we have to be clear that the Chinese weren't pushing for it. It was a model that was perhaps available to others to emulate. And that brings us back to the initial point we raised about how this might help us challenge the Eurocentrism of development studies. We often assume that models and ideas developed in the global north are what have sort of been followed by everyone else. But here, of course, we're seeing something slightly different. Now, you could say that development banks are Keynesian after all, that it comes to us from Keynes, but I'm not sure that that's the genealogy necessarily in this particular case. It is, as you say, Alfredo, a response to what is called or perceived as the Chinese threat. Thank you. Rand, did you want to add anything?
Okay, thanks. So Lorena, if you're okay to respond, and then we'll take a final round.
Yeah, and I think I'm going to answer by delving into these discussions, because it's not really clear how to divide, for instance, what is a Chinese foreign direct investments versus a BRI foreign direct investments, and what is a public foreign direct investment or what is like a public one. And another issue that it's interesting that is going on in Uzbekistan is that it might be that you have very domestic oriented investment done in Uzbekistan, but with a soft power attached to it policy. For instance, there has been in many instances, Chinese companies, for instance, without making names in telecommunications, that have been setting up training for youth and for students, and been sending workers in different sectors, not in telecommunication, to China to learn specific skills, or kind of create affiliation, which is like, I mean, you can think about it as a geopolitical persuasion, or as a sort of I mean, in the case of the European case, but yeah, it's just to answer your question, it's like, it is true that they're going to do, I mean, they've been like doing infrastructure, they've been doing an Angren corridor, which is one of the most difficult mountain area, which is the border between Uzbekistan and Tajikistan, in record times, financed by the Chinese. But this is like not only obviously domestically a success, but also for obviously logistical and regional reasons. But this has created multiplier effect that are not only economics, are like social, and are like created a dependency, if you want. I would say that because like Uzbekistan in the specific, to conclude, is desperate to create employment and jobs, manufacturing is in the top agenda, but this is the same for Europe at this time. So you can look at in foreign investments, Chinese foreign direct investments, as an opportunity to create employment in manufacturing sector, but the big chunk of capital is going into the infrastructural sectors. but not because Chinese are, it's just, I mean, we've been underfunding this. I mean, the European and Western centric model has been underfunding this crucial investments for decades, and that's what they need. I mean, and then we can argue is that to facilitate their import or to create a market or to facilitate exports, that's a very important question. But the point here is that they've been filling a gap. There was a gap. So yeah, I'm gonna stop here.
Okay, thanks very much for those answers. I think very interesting discussion here, and there is clearly an overlap between the different kind of lenses that people are taking with this. But so okay, so I think we have one question for Indrajit.
Yeah, hi, can you hear me?
Yeah, please go ahead.
Hi, yeah, I just had a question. I thought the presentation was very interesting and the paper is clearly very promising, but it seems in your presentation that you're kind of necessarily portraying China's rise as confrontational and as necessarily in opposition with the established order. But there are so many instances where we see that China has been adjusting the global order because in so many instances it does fit its interests. So I was just wondering if you could expand a bit more on that and whether you're thinking about introducing nuance, instances where the Chinese are actually happy to play with the established rules of the game. Thanks.
Of course. Nick, did you want me to respond to that right away, or did you want to pick up more questions?
I was going to take one or two more. I mean, I actually have a couple of my own, if that's all right. I have one for Indrajit and Ran, but maybe I'll save that to the end if there's time, because we already have one. But for Alfredo, I found this extremely interesting. I mean, a couple of questions on this actually. So one thing is, do you have a sense of who these investors are and where they are that are investing in the Panda bonds? I mean, I saw a presentation recently from Johannes Petri, who's written about this in Chinese investment in stock exchanges in Kazakhstan and Pakistan, for example, and part of that being about trying to develop local capital markets and have local financing for some BRI projects. So I wondered, I mean, is there anything like that happening in Latin America, for example, or other places that you're aware of? And also, I wonder if you talk a bit more about risk and about, you know, I mean, it seems to me clear that, you know, you look at, say, Venezuela, that there have been Chinese institutions that have kind of run into problems with this, and that presumably has prompted some changes in terms of, you know, thinking about risk and maybe how to deal with it. Now, obviously, there has been strategies of things like collateralization in the past. I mean, you know, you get this very overblown discussion about debt trap diplomacy, and there doesn't seem to be a great deal of sand to that. But I wonder if you have a sense of whether there might be, you know, new strategies being developed about that, about how to share risks on the part of the Chinese institutions. And then Lorena, I mean, this is a very unfair question, but talking about these really interesting engagement, the state capitalism stuff here. And I mean, to be honest, I'm trying to do something a bit similar on Belarus. So I think this is a very interesting way to kind of frame it. But I wonder then, the unfair question I have is there potential here for, you know, Chinese engagement to support a kind of economic model that has some sort of, you know, however exclusionary it may be, but a stable path of genuine accumulation? Or are we, you know, are we talking about a sort of, you know, a sort of more stagnant rent-based sort of economy, or what do you see? I mean, in terms of genuine potential for structural transformation, I suppose. So that's all a little bit long-winded, but please go ahead. So I guess Indrajit and Ran, if you want to go with the first question there.
Sure, thank you. Ran, if it's okay, I'll take that. And then if you have anything to add, go ahead. Is that all right? Yeah. Thank you, Tin. I think, yeah, it's a great question, and it's something that we've been asked often for obvious reasons. No, we take that as a starting point. We take this confrontation as a starting point simply because it's a convenient hook, People love it. This is what everyone's been talking about. But of course, we don't believe that China is, on a path of confrontation. There are two ways to frame that. One is what China doing? Is it resulting in confrontation or undermining the liberal international order? And second, does China intend to undermine the liberal international order? Now, our response, as Ran indicated in his presentation, is that there's no way of saying, having a single answer to that. The response has to be necessarily nuanced, as you sort of indicated. And I think Ran, when he said, the implications are fragmented, it's fragmentary. There are ways in which China's emergence challenges, undermines key elements of the liberal international order, and there are ways in which it strengthens it. Now, if you think about Eikenberry's sort of way of thinking about liberal internationalism, or if you think about any way of thinking about liberal internationalism, you think about openness to trade and exchange. And of course, that's something that the Chinese are pushing for. Because, as you say, as you indicate, it supports them. It's favorable to them. So why would they be against undermining the liberal international order? But from this to suggest that the Chinese are assimilating into the liberal international order, as some liberals tend to do, which is to say that China is going to become a liberal democracy itself sooner or later, or that China will march into the warm folds of Eurocentric sort of development, I think that's rubbish. Because when it comes to thinking about again, and this is another liberal assumption, that the world will inevitably move towards a liberal democracy, I don't see that happening. And I certainly don't see China emerging as a champion of liberal democracy. Whatever else it may champion, it's not likely to be championing liberal democracy. So you're right, nuance is necessary. We do start from a somewhat monolithic position, but then we sort of, our contributors have pushed us to thinking about more nuance precisely along these lines and these ways of thinking about the liberal international order.
Sorry,
okay, thanks very much.
Ran, did you want to?
Yeah, no, sorry, I just want to kind of emphasize, I think it's the question is really fair, and actually we are thinking about it when we are co-writing this introduction, because we do not want to leave the impression on the reader about the we have this presumption that China is going to challenge. So we are more of just trying to explore the implications, of China's power over the liberal international order. So I think that's kind of like things we are thinking about at the moment. But I think if I leave you that kind of impression, I think it's more of about the way we present the case. But yes, we are trying to explore the nuanced idea of China's rise, in a broader terms, because we're fully aware China's practices. Let's, for instance, the Asian Infrastructure Investment Bank, actually, this particular practice is largely in line with these, other international financial institutions like World Bank and IMF. So we are kind of trying to present a more nuanced picture rather than, saying this is rather than say, China is going to challenge or fully integrated.
Okay, thanks. We only have a few minutes left, but if you both are able to
I can
speak
say
to that
something
briefly, yeah.
Yes, so I sent you this link, and those are, it's a report on who are issuing Panda Bonds. And basically it's development banks like the Asian Development Bank or the New Development Bank. You have also like states, Poland, Hungary there, Canada, a province in Canada, British Columbia. And then you have banks, like for example, the May Bank, it's a Malaysian bank, and they also these Panda Bonds, not all the companies or agents that are issuing these Panda Bonds are for Belt and Road Initiative projects, but I know that the May Bank, for example, it's a Malaysian bank, issued these Panda Bonds, and they were going to use it for a specific project. Then you also have here a lot of companies like Daimler, Veolia, Environment, Air Liquide, French companies. These companies are issuing these bonds in China, but they are going to use the proceeds to do investments inside of China, not in abroad. So and that's the majority of all these Panda bond issues. So it's still this Panda bond financing of the Belt and Road Initiative is something that is going quite slow, and I think that, as I said, they were a little bit worried that they could not control the use of those funds. Yeah, and who is buying these Panda bonds? It's like Chinese banks, Chinese insurance companies. Yeah, the Chinese investors in the Chinese bond market. Yeah. Regarding the risks, Venezuela, etc. Well, I mean, I think that this Panda bond is an idea of sharing this risk, because it's not the same thing. If you get, for example, this Maybank, I know also there is now, I mean, 2 years ago, and they must be advancing, but I haven't heard anything. In Morocco, they were going to do, one of the biggest commercial banks in Morocco was issuing these Panda bonds, or were going to issue them to finance big projects in housing. So again, these are strategies, and even these national development banks issuing, but these are all strategies to have like local actors that will like play in favor of China. So yes.
Okay, thanks very much. I mean, it is just past 4 o'clock, but Lorena, would you be all right just to answer very briefly?
Yeah, I mean, one sentence. I rely more on the rent-seeking literature of Mushtaqan, in which I define like rent as productive or non-productive. So I'm going to go a little bit beyond the rent-seeking approach in the mainstream sense. But yeah, I'll be sure to share output. But if you're interested in the Belarusian case, there is in Austria, in Vienna, very interesting cluster looking at state capitalism in Russia.
Oh yes, of course. Yeah, good. That's a good tip. Thank you. Okay, so I mean, we will have to finish off there. I will do a very quick plug for, there's these projects at York and Open University. And also, I'm a member of the China and Europe Research Network, which is chaired by Nana de Graaf at VU Amsterdam. And, so it seems like we're all looking at similar things from slightly different angles, perhaps, but there's clearly, potential for quite, interesting sort of collaborations there in any case. But anyway, we will end there. Thank you very much to the presenters. I think there's been an excellent spread of surprisingly related papers, and we will have a chance to revisit some of these questions and develop on them tomorrow. We have a second session of this panel, same time tomorrow. So hope to see many of you there again then. Thank you very much.
Thank you.
Thank you.
Thanks. Bye-bye.
Thanks a lot.
Bye.
Thank you.
Bye.
Thank you. Bye.